Very good evening to one. Excuse me. I welcome you all for the second day of virtual series of program on GSTR return filings and land practice. And today we are going to, sir is going to deal with the GSTR 1 and 4. Hope yesterday you have wonderful session with this, sir. Sir, let me inform you, and a lot of applauses you have seen already in the chat box, and also in the WhatsApp group, ARS WhatsApp group also we have received so many applauses about your session. It has never happened before. And on behalf of our students, I thank you all for this. Thank you, sir. And also, excuse me. And also, students, and we have received so many responses about what are the future programs to be conducted, and we are feeling so happy that you have, for the interest you have shown in updating your practical knowledge. Definitely, we will cover all the topics, and even some more sessions are also. We invite you from the persons other than who are in the ARS group. Thank you, one and all. Over to you, sir.
Thank you so much, ma'am. Thank you. Hello, my dear friends. Very good evening to all of you guys. So today it's time to discuss a lot of interesting points, especially in relation to GSTR 1, as we know that GSTR 1 is a statement of outward supplies. So there are a lot of interesting points in this GSTR 1, which I'll spend some good time with you guys, and also discussion about some interesting scheme known as QRMP, which stands for Quarterly Return Monthly Payment Scheme. So in today's session, we'll cover all these interesting areas, especially with respect to GSTR 1, QRMP, and also we'll talk about PMT 06, how do we make the payment of GST, and special points, new points which have come up, PMT 09 for transfer of balance from one head to another head in case of electronic cash ledger. So we have got a lot of interesting elements to talk, which we'll discuss in detail. So before I proceed, I'll first share the file and document with you guys so that you guys can keep it for your reference and we can talk in detail. Yeah. So I've just shared the file, my dear friends. That's a PDF document. It's a PPT. It is converted to PDF. That document is there with you guys now. You can keep it for your reference because we are going to talk a lot of interesting points from the PPT document, which I shared with you just now. Yeah. And students are continuously asking, please add me to WhatsApp group. Don't worry, we'll do that subsequently. Now let's get back to our subject and focus on our GST now. Yeah, right. I'm sure in the yesterday's session, you guys have got some good knowledge with respect to the discussion about what are the basics of the GST, important elements we should know about GST, and also with respect to overview of GST returns. So what we have spent time is only the overview of GST returns in understanding what are the various GST returns which are involved with respect to complying with GST law. And today's session is exclusively with respect to discussion about GSTR 1, QRMP, and also PMT 06. Now, when I say GSTR 1, it's not that just like that we look at GSTR 1 and leave it. There are a lot of interesting points. There are almost 13 tables in GSTR 1 with which you are required to get some good knowledge with respect to all the 13 tables. So every table we'll talk in detail and discuss in detail. Don't worry. Clear? So without any delay, let me start the discussion and move forward. Come on. As we know that this is purely law and practice, so definitely we'll do both the things. So let me share my screen, my dear friends. Yeah, so I'm sure the screen is visible for all of you. Yes, thank you so very much. So first of all, my dear friends, let's talk about a lot of interesting discussions, especially in relation to GSTR 1. As you all are aware, the basic fundamental concept that GSTR 1 is purely a statement of outward supplies. In fact, strictly speaking, GSTR1 is not a return. It is purely a statement of outward supplies where we disclose our details of outward supplies, especially in terms of what are the outward activities what we have done. We do not talk about inward supplies in GSTR1. What we talk in GSTR1 is only the outward supplies. And let me tell you, there are totally 13 tables in GSTR1 in which we disclose various details, especially in relation to all the B2B supplies, B2C supplies, debit notes, credit notes, amendment, all the details will cover in GSTR1. And step by step, point by point, in every column, what we enter and what is covered there, we have covered in a detailed PPT. In that, we'll talk in detail. Every column, what are the details, we'll fill in that column. So what is GSTR1? GSTR1 is purely a statement of outward supplies, where we do not disclose the details of inward supply. We disclose the details of only outward supply. And in GSTR1, there is no payment of tax involved. The question of payment of tax is only through a challan, and the return is filed in GSTR 3B. GSTR 3B. GSTR1 can be filed even without payment of tax. The story of payment of tax will come only and only in case of paying through a challan or when we file our return GSTR 3B. But when I talk about GSTR1, statement of outward supply, in that there is no question of payment of tax involved. Of course, one new concept has come up, which is nothing but QRMP scheme, quarterly return, monthly payment. What is that? That also we'll talk in detail. But first, I will spend some good time with you guys on discussion about complete story of GSTR1. Then I'll also talk about IFF invoice furnishing facility, and in invoice furnishing facility, what is the significance of PMT 06? And the concept of invoice furnishing facility will come only in case of QRMP scheme. And what is the full form for QRMP? Name only says QRMP, which is nothing but quarterly return monthly payment scheme. Name only specifies that it is a purely a quarterly return, but payment is done on monthly basis. So it is purely a quarterly return monthly payment scheme. Clear? Yeah. So without delay, let me proceed to this concept, my dear friends. But let me tell you one point. It's also important that you guys get a clarity of thought for whom this QRMP scheme is applicable and for whom this scheme is not applicable, and what are the due dates involved in that. So let's start the discussion now. And as I told you already before also, any doubts you get during the course of discussion, you can feel free to post your queries in the chat box. I'll be more than happy to answer your queries. Right. So let me start my PPT. Yeah, I'm sure the PPT is visible for you guys. So the discussion for today is GSTR1, IFF, and also about PMT 06 and CMP 08. CMP 08 is in case of composition. It's a challan used for quarterly payment of tax. And one thing, let me first only tell you before I proceed, that is, today we thought actually we will also cover about GSTR 4, but I deferred that later because GSTR 4 is an annual return in case of composition registered person. So we thought, since it is like an GSTR 4 is a return which is filed on annual basis, we thought we'll cover that along with annual returns. So today's discussion, we'll do GSTR 1, IFF, PMT 06 and CMP 08. Yeah. So now, first, today's coverage, GSTR 1, IFF, PMT 06, CMP 08. Then this table is very, very important where you should definitely get clarity upon. Please see that, my dear friends. First, where turnover does not exceed 1.5 crores, we call them as small taxpayers. And the reason that it is important to regard them as small taxpayers because law has specified that those category of persons whose turnover does not exceed 1.5 crores, instead of filing their GSTR1 on monthly basis, they can file their GSTR1 on quarterly basis. And the due date is 13th of the month following the end of quarter. I repeat, the due date is 13th of the month following the end of quarter. And next column you can see where the turnover is less than 5 crores, they can go for a QRMP scheme, which is nothing but quarterly return monthly payment scheme. So the concept of QRMP is applicable only to those category of person where turnover does not exceed 5 crores. And where turnover is more than 5 crores, they definitely have to file the return on monthly basis. And that too, the due date of filing is not 13th of next month. The due date is very clearly 11th of next month. So in simple terms, my dear friends, I'll tell you an interesting situation here. So in simple terms, I will draw one more table also so that I can give you some more element of clarity there. Listen here. Look at the small table, guys. Yes. So guys, so in simple terms, you have to understand that situation 1, that is case where turnover does not exceed 1.5 crores. These category of persons, we regard them as small taxpayers. And where government has told, my dear friend, instead of filing return on GSTR1 on monthly basis, you can go ahead and file your GSTR1 on quarterly basis by 13th of the month. Which date, my dear friends? 13th of the month following the end of quarter. 13th of the month following the end of quarter, they can file GSTR1 on quarterly basis. Now, other side, my dear friends, where turnover does not exceed 5 crores. Where turnover does not exceed how much, my dear friends? 5 crores. Now, please listen. Whenever turnover does not exceed 5 crores, there are two interesting situations here. One, they can opt for QRMP or no QRMP. So there is a possibility they can go for QRMP or they need not go for QRMP because QRMP is not mandatory, it's only optional. So if it is no QRMP, my dear friends, straight away monthly basis by 11th of next month. Monthly basis by 11th of next month. And this concept will also apply to those whose turnover is more than 5 crores. So those category of persons whose turnover is more than 5 crores, for them also straight away the concept is they will file the GSTR1 on monthly basis by 11th of next month. But when they go for a QRMP, which stands for Quarterly Return Monthly Payment Scheme, let me tell you an interesting point. Here, they will only do IFF, and this IFF due date is 13th. Straight away, this IFF due date is 13th, my dear friends, 13th of next month. So first month, second month, they will do IFF, and third month, they will file GSTR1. So what is that? We'll talk full detail. When I go to QRMP, I'll discuss in detail what is that they'll do in first month, what is that they'll do in second month, what is that they'll do in third month. 3 months bifurcation I'll show you when I go to QRMP scheme. Don't worry, my dear friends. Yeah, next. Moving forward. So going back to my slides, see that. So as I told you, my dear friends, where turnover does not exceed 1.5 crores, they are regarded as small taxpayers and they can file the return on quarterly basis by 13th of the month following the end of quarter. And where turnover is less than 5 crores, these guys have got an option to go for QRMP or not to go for QRMP. And if they go for QRMP, the due date for IFF is 13th of next month. And if they don't go for QRMP, or in a case where turnover is more than 5 crores, these two cases, the due date to file GSTR1 is 11th of next month. What's the due date? 11th of next month. Next point. Yeah. So you can see, guys, here, this is the GSTR1. GSTR1, as I told you that there are totally 13 tables in GSTR1. Please look at that. GSTR1 contains details of all outward supplies, that is technically your sales or services also. In service cases, it is services. If it is goods, it is sales. And the return has a total of 13 sections, which are listed down as follows. Every section will talk in detail, and every point I've covered a screenshot there. So please see that. Table 1 and 2, GSTIN, legal name and trade name. Guys, what is the difference between legal name and trade name? The point is very clear that trade name is the name through which the business is being operated. it is not necessary that legal name, trade name, both should be one and the same. For example, Shivateja, my name is Shivateja Todupunuri. That is my name as per PAN card, which is known as the legal name. Legal name is nothing but name as per PAN. But the trade name is the name through which you are doing business. For example, in my case, I might start one business with the name of Shiva Enterprises. Now, the Shiva Enterprises is not a legal name, it is only a trade name. Trade name is the name through which we are doing business. Legal name means name as per PAN. Legal name means what, my dear friends? Name as per PAN. And GSTIN, as we know that GSTIN is a 15-digit alphanumeric code. 15-digit alphanumeric code where first 2 digit represents the state code, next 10 is PAN. Remember this point? Good. We discussed that. Next, return period and the due date of return. These details, what will happen to that details? These details are auto-populated. Obviously, they're auto-populated, guys. No doubt about it. Let me show you one practical situation here. Now see, let me open the GST portal. Yeah? Hold on. So this is the GST portal, as you all are aware, the fundamental GST portal. So here, if I log into one of my client, so what happens here is, nowadays in dashboard, they are clearly showing GSTR1 or IFF. Here red basically signifies return is not filed. The green signifies return is filed. And May they are showing to be filed because for May month, the due date is still not yet over. Clear? Now don't ask me doubt, sir, last 2 months why you did not file the return. I did not file because client did not give data. Focus on what is required now. See, so in services, let's say if I go to returns and I click this return dashboard. In the return dashboard, I'll select April to June. In this, let's say I select the April month. In that, my dear friends, so here GSTR1 details of outward supplies of goods or services. Let's say if I open this GSTR1, you can see here, as I have shown you, the first thing you'll find is GST number, legal name, trade name. I told you that legal name, trade name can be same, but there's also a possibility that legal name, trade name could be different. It depends upon very clearly the name with which you're operating your business, financial year, return period, status, and the due date. And below, as I told you, you will totally find 30 tables there. And what is the significance of each and every table? I'll show you. Don't worry. Clear? Good. Next. Yeah. So coming back to presentation, guys. So table 1 and 2 is what? GSTIN, legal name and trade name. Then return period and due date of return. These details are what populated? Auto-populated, obviously, based on the data which we have given at the time of filing our, getting our registration done. Very clearly. No doubt about it. Next. See the next point here. See here, guys. Now, what is the interesting point? Table 4. This is one very, very, very important table where there's a lot of significance for this, because table 4 is the area where we show the details of our B2B invoices. Now, what is the difference between B2B and B2C? Let me explain that to you, my dear friends. Yeah, come on. Before that, one of our friends is asking, sir, due date is 26th due to extended, right? Yeah, my dear friend, let me tell you, for the month of April, May, June, and also for the month of March, April, May, June, considering this COVID situation, government has given some extensions only for these few particular months. Because there is a COVID impact across the country, government has extended the due dates. Okay, now getting back to discussion. Now see, so my dear friends, let me tell you that there is something known as B2B and B2C. What is B2B? B2B is nothing but business to business. Now, what is the difference between B2B and B2C? Listen very carefully here. And there is an important discussion which I'll do with you right now, which is very, very important, where clarity of thought is required. So please see that discussion very carefully. Here. So let's say, for example, there is one company known as Sun Pharma. This Sun Pharma is a registered person in Maharashtra. Registered person in Maharashtra. Now, what they have done is that they have supplied medicines to Mr. A, who is also a registered person, but is a registered person in Gujarat. So what? And we all know that GST registration to be obtained state-wise, but not centralized. GST registration is very clearly state-wise, but not centralized. Correct, guys? So what is happening here? So Sun Pharma, which is a registered person in Maharashtra, they have supplied medicines to Mr. A, who is a registered person in Gujarat. Now, let me ask you guys, is this a B2B transaction or B2C transaction? Is it B2B or B2C? Come on. Undoubtedly, without any second thought, my dear friends, we will definitely regard this as B2B transaction only. So in simple terms, we say if one registered person is supplying to another registered person, we'll treat it as B2B. But other side, if Sun Pharma is supplying to Mr. B, who is an unregistered person, we will call it as B2C transaction. So when supply is made to a registered person, supply is made to whom, my dear friends? Registered person, we will treat it as B2B transaction. But when supply is made to an unregistered person, we will treat it as B2C transaction. Now, one point you have to understand very clearly here is that when I talk about B2C, it is not business to customer, it is business to consumer. Business to consumer. That is what is the basic fundamental meaning of B2C. And registered to registered, it is B2B. Registered to unregistered, it is B2C. Now, some special point I want to tell you here. That in case of B2C, there is B2C large and B2C others. So what is the first one? B2C large. Second one is B2C others. Now, what is the difference between B2B, B2C large and B2C others? There is nothing called large and others in case of B2B. But this concept of large and others is there only and only in case of B2C. I repeat, my dear friends, this concept of large and others is not there in case of B2B, but it is there only in case of B2C, my dear friends. Now, what is the interesting point here? B2C large refers only to interstate supplies. B2C large covers interstate supplies where invoice value is more than 2.5 lakhs. So what is covered in B2C large? B2C large covers only those transactions which are interstate supplies where invoice value is more than 2.5 lakhs. And B2C, of course, covers two situations. One, interstate, where value is up to 2.5 lakhs. Other one, intrastate, any value. Intrastate, any value. So what is covered in B2C large is very clearly B2C large only covers interstate supplies where invoice value is more than 2.5 lakhs. Only they are covered in B2C large. That point is very, very clear in law. Now, what is the significance of this B2B and B2C? Why I explain this concept to you is for this reason. That is, in case of B2C large, they are given in GSTR 1 that invoice-wise details. What's details? Invoice-wise details are required to be reported. So what are required to be reported? Invoice-wise details are required to be reported in case of B2C large. But in case of B2C others, we will only give consolidated details. We won't even give invoice-wise details. We don't even give each customer-wise what is the figure. We will just show the figure of lump sum figure there in case of B2C others. That point should be very, very clear for all of you. Now, one doubt which can come is, sir, what happens for B2B? One point is very clear that in B2B, definitely we will show invoice-wise details. Without any second thought, for B2B, 101% will show invoice-wise details. Obviously, because recipient should be able to get input tax credit. He should be able to see that in GSTR 2A and GSTR 2B. That is why in case of B2B, invoice-wise details are mandatory. But in B2C, we have got 2 points there. That is B2C large and B2C others. And what is covered in B2C large? Intrastate supplies, where invoice value is more than 2.5 lakhs. Only they are covered in B2C large. And in case of B2C large, invoice-wise details are required to be reported. But for B2C others, invoice-wise details are not mandatory. We will only show consolidated details. That point should be very clear for all of us. In B2C others, we do not show invoice-wise details. Just lump sum figure will show there. That's it. Clear? That is about B2C large and B2C others. Because when I show you now entire form and every column, there you will get all these words B2C large and B2C others. That time you should not be surprised. What is this large? What is this others? No different meaning you should bring there. Here B2C large means interstate supply, where invoice value is more than 2.5 lakhs. Yeah? Clear? And one point is very clear. I clearly wrote that word B2C others covers only consolidated value. Yeah. One student is asking a doubt. Sir, in case of B2C intrastate, invoice value is more than 2.5 lakhs. The invoice value details are required. Of course, no, my dear friend, because I just told you that B2C other, intrastate B2C, whatever is the value, intrastate B2C, whatever is the value, then definitely we will show under consolidated details only. We are not required to show invoice-wise details. Clear? Yeah. Next. Another interesting point, let me ask you guys. Now, what do you think is the difference between intrastate supply and interstate supply? First basic fundamental point, we all know that in case of intrastate supply, we will charge CGST and SGST. For interstate supply, we will charge IGST. This point we know, right? Yeah. Now I'll ask you an interesting question. You think very properly and tell me the answer for this, because I want this to be very, very interactive. This cannot be a situation where you are just like that listening and going. That should not be the criteria. Criteria is very clear that you should get clarity of thought on every point we are covering. Yeah. Now listen, I'll just discuss and ask you one question. Think properly and tell me the answer here. So what is happening here is that there is one person, Mr. Virat Kohli. Okay, right. He is basically in Maharashtra and he is a registered person. And what is happening here is that Virat Kohli is planning to construct a building. I repeat, Virat Kohli is planning to construct a building in Goa. Basically, in Goa, he intends to have a guest house. Clear, guys? Now, an interesting point to be noted here is that Virat Kohli contacted Mr. Malhotra. Virat Kohli contacted Mr. Malhotra, who is one top interior designer. Top interior designer, who is also a registered person in Maharashtra. Who is also a registered person in Maharashtra. So I repeat, guys, Virat Kohli is a registered person in Maharashtra and he contacted Malhotra and he paid Mr. Malhotra an amount of 2 crore rupees for giving design to the house which is to be constructed in Goa. So Virat Kohli contacted Malhotra and told him, boss, I'm paying you 2 crores. I want you to give a design for my guest house which I'm planning to construct in Goa. Clear? Now, I'll ask you one straight question. First of all, will GST apply? Definitely answer is no. Definitely answer is no. If GST is applicable, if GST is applicable, definitely answer is yes. GST is applicable. Now, my question to you is, will Malhotra charge CGST and SGST, or will he charge IGST? That's my question. Will Malhotra charge CGST, SGST, or will he charge IGST? 101%, my dear friends. First point, let me tell you the answer. I'm seeing the chat box and I'm so glad and happy that there are multiple answers coming. And luckily, none of them told UT GST. Wonderful. I'm so happy for that first. Yeah. So, guys, let me tell you, my dear friends, in this case, the answer is very clearly IGST, my dear friends. Because one point very clearly is that we look at two important parameters to decide whether a transaction is an intrastate or intrastate. That is, number one, location of supplier, and second important parameter is place of supply. These are the two important elements what we look at to decide whether a transaction is intrastate or intrastate. And what we always say is that if the location and supplier, if the location of supplier and place of supply both in same state, we call it as intrastate supply, where we charge CGST and SGST. And by any chance, if the location of supplier and place of supply are in different state, we call it as interstate supply, and we definitely charge IGST, my dear friends. And place of supply, we have got some specific IGST provisions which talk about provisions of place of supply, and we have got one brilliant point, that is, as per section 12 subsection 3 of IGST Act, there is one point which says that place of supply in case of service in relation to immovable property, place of supply for service in relation to immovable property is the place where immovable property is located or intended to be located. Now, in this particular case, where is the property located? Property is located in Goa. So, supplier is in Maharashtra, but place of supply is Goa. Now, when supplier is in Maharashtra and place of supply is Goa, both are in two different states. What will come into picture is IGST. And practically the problem is people start thinking, I'm Malhotra, you are Virat Kohli, you are in Maharashtra, I'm in Maharashtra. Both are in Maharashtra, we both are same. We will charge CGST, SGST. Ridiculous. Nonsense. What will come here is very clearly IGST, because there is an important element known as place of supply. And I'm talking so much about this because in every column of this GSTR1, everywhere we will find this word place of supply. And if place of supply is determined wrong, then gone. Completely gone. Clear? Now I'll ask you one more important question. This also tell me an answer. Because why this has got some significance, let me tell you very clearly. Listen. So let's say there is Shiva Teja. Okay, guys? Now, Shiva Teja is a registered person in Telangana state. Now, what has happened is that I went to Goa, and in Goa, I stayed in hotel. And what has happened is the bill has worked out to 10,000 and GST at 18%, 1,800. And the hotel has charged me CGST and SGST. Goa, I stayed in a hotel which is a registered person in Goa. And hotel charged me what? CGST and SGST. CGST and SGST. Now my question is, can Shiva Teja claim input tax credit? Of course, input tax credit is tomorrow's discussion. In GSTR 3B, 2A, 2B we will talk. But still I'm asking you, can I claim input tax credit? Definitely, my dear friends, 101% answer is no, my dear friends. Because one point you have to understand is that Shiva Teja, being a registered person in Telangana state, I can claim credit of two things. Number one, I can claim credit of CGST, SGST paid in Telangana, and I can also claim credit of IGST. But I cannot claim credit of CGST, SGST paid in Goa. I repeat once again. Shiva Teja, being a registered person in Telangana state, I can claim credit of two things. Number one, I can claim credit of CGST, SGST paid in Telangana state, and I'll also claim credit of IGST. But I can't claim credit of CGST, SGST paid in Goa. But imagine if I have got registration in Goa also, then at the time of bill, I will give my Goa GST number, and then I can take credit in Goa GST number. But I can't take credit in Telangana GST number. That's the point. Good. So I think there are a couple of questions from friends. Let me see that. So one of our friend is asking, yeah, what is that question? Sir, we are showing intrastate supply more than 2.5 lakhs under B2B. My dear friend, I already told you that if it's a B2B transaction, show under B2B. If it's a B2C, where intrastate more than 2.5 lakhs, show under B2C large or show under B2C others. Done. Next. What else? Yeah, one of our friend is asking whether Malhotra have to show Maharashtra GST number for Koili or Goa GST number. I clearly told you that point that Malhotra is registered in Maharashtra. So if Malhotra is registered in Goa, their story is altogether different. Because the point is very clear that under GST law, registration to be obtained state-wise but not centralized. There is a possibility that in every state you might be registered. Take an example of Reliance or take an example of Tata. These guys have got registration in almost every state, my dear friends. No doubt about it. Yeah. So in this case, the point is very clear that wherever he is registered and from where he has supplied that service, that GST number will show. Next. One friend is asking, sir, IGST bill is not given, sir. My dear friend, in case of this hotel Goa, they will not give IGST bill. I cannot even ask that Goa hotel telling, please give IGST bill, because it is the responsibility of the supplier to determine place of supply. And from the point of view of hotel in Goa, place of supply, I already told you that for immovable property is the place where property is located. So from hotel point of view, place of supply is Goa and supplier is in Goa. Now, when location of supplier is Goa, place of supply is Goa, definitely that hotel will charge CGST and SGST. I cannot ask the hotel, please charge IGST. They'll definitely charge CGST, SGST. No doubt about it. And I cannot even request, and they'll not listen to me, because it is their responsibility to correctly determine place of supply. I'm sure your doubt is clarified. Yeah. Next, going back. So guys, this is an important discussion, because this place of supply and the story of this CGST, SGST, IGST, all this B2B, B2C, large, everything will come in GSTR 1. So their clarity is required. Can I proceed? Yes, I think I'll move forward. Wonderful. Thank you so much. So I'm going back to my presentation, guys. So you can see here that table 4, taxable outward supplies to registered persons, including UIN holders, excluding zero rated supplies and deemed exports. Because for zero rated supplies and deemed exports, there is one separate table in GSTR 1. What is that? We'll talk in detail. Clear? Now here, don't get to a doubt. Sir, what is the meaning of this word UIN holders? One point, let me tell you that GSTIN stands for GST identification number, which is a 15-digit alphanumeric code. But in certain categories, that is embassy, consulate, or any agency of United Nations, these guys, for them, instead of giving GST number, government is allotting them UIN, which stands for unique identification number. Unique identification number. And that importance is very clear that whoever has got this unique identification number, these guys can directly claim refund of the tax paid on their inward supplies. That's the whole idea there. I repeat for more clarity here. So this concept of UIN is applicable only to any consulate or embassy or any agency of United Nations like UNICEF, UNESCO, or WHO. Very popular nowadays, World Health Organization. So these guys, for them, instead of GSTIN, what is granted to them is UIN, which stands for Unique Identification Number. And the fundamental purpose of UIN is that, for example, let's say if I supply some goods or services to that category of person who has got UIN, then in the bill, I will charge GST. But whatever GST they paid to me, this UIN holders will subsequently claim refund. That is the significance given to this UIN holders. Clear? Done. So taxable outward supplies to registered person, including UIN holders, excluding zero rated supplies and deemed export. What is zero rated supply and deemed exports? We'll talk in detail separately. Next point you see. All B2B supplies should be mentioned in this section, including all outward supplies on which reverse charge is applicable. Guys, first of all, what is reverse charge? I want to spend little time here because it is very important to know what is reverse charge. First of all, reverse charge in short, we always say RCM, which is nothing but reverse charge mechanism. In general, the person who is liable to pay GST is always the supplier. But there are some special transactions where supplier is not liable to pay GST, recipient is liable to pay GST. Those transactions are known as reverse charge mechanism, where supplier is not liable to pay GST, recipient is liable to pay GST. In fact, my dear friends, I'll take 2 minutes here on showing some document to you guys. Wait a second. Yeah. So let me share that document also with everyone first. So I shared the document, guys, and I'll open the document also here. So this is the list of goods or list of services which are covered under RCM. And we see very clearly there are so many services which are covered here, like legal services. That is, when lawyer is giving service to a business entity, then who is liable to pay GST is not the lawyer, but the business entity who is liable to pay GST. And one point very clearly, which I'll tell you, is that which I want you to keep in mind, which I'll anyways talk in detail again tomorrow in GSTR 3B. But still, let me tell you now that whenever we pay some output tax, if we have got some input tax credit, we'll use that input tax credit, and the balance, if any, what we have to pay, we'll pay using cash ledger. This point we know, right? Yes. So for example, 100 rupees is my output tax, and I've got input tax credit of 60. I'll use that 60, balance 40 I will pay using cash ledger. Now, whenever we are paying any tax under reverse charge mechanism, under what mechanism? Reverse charge mechanism, then we do not, and moreover, we cannot use the balance in electronic credit ledger. Any tax payable under RCM should be paid using electronic cash ledger only. And it's very logical also. Don't ask why, because it's very logical. The logic is simple, because whatever balance is there in electronic credit ledger is an input tax. And input tax can be used only for the purpose of payment of output tax. And whatever tax we are paying under reverse charge mechanism is not an output tax. That is the reason why they clearly told in the law that if there is any tax which is required to be paid under reverse charge mechanism, then you cannot use balance in credit ledger. You have to use balance in cash ledger. So like this, there are so many interesting services which are covered under RCM. And fourth point is very interesting. You can see that director services. So whenever director is giving service to a company, who is liable to pay GST is always the company. Of course, if the director is an employee, then there is no question of GST at all, because service by employee to employer do not attract GST. That is why practically no salaried employee pays GST. Next point, insurance agent to an insurance company, recovery agent to bank, then service of overseeing members of overseeing committee of RBI to RBI. Next point is about author, book publisher I'm talking about, then music composer to music company, Sony Music. But one important note which has come up recently, author can exercise the option to pay GST on the service relating to literary works under forward charge. If you want to go for forward charge, he can go for that forward charge. Forward charge means he will only pay the tax, not the recipient. I'm discussing all this because in GSTR1, we will clearly show whether any supply is made on which recipient is liable to pay under RCM. So if we only don't know what is covered in RCM, then gone. Next, service by way of transfer of development rights or floor space index for construction of project. What happens is that a lot of times landlord gives his land to a developer for construction of apartments. So technically landlord has given development rights to the promoter or the builder. So that service is also covered under RCM. Then long-term lease of land against consideration in the form of upfront amount. So this long-term lease, this is also covered under RCM. Then services of individual direct selling agent to any bank. Now what is the direct selling agent? So a lot of times when we're sitting at home or some work is going on, suddenly we get some phone call. Sir, do you want a credit card? Sir, do you want a loan? We are ready to give you loan. We're ready to give you credit card. Of course, we should only pay the bill, but they just give that credit card free. That's all. So these calls are actually not made by the bank. Bank will appoint some selling agents. Selling agents are the agents of the bank who will give service on behalf of the bank, where they'll call the customer and they try to get the customers. These are known as individual selling agents. So for the service given by individual direct selling agent to the bank, who is liable to pay GST is clearly the bank only. Next point, service of business facilitator and services of business correspondent, and then security service. We know that a lot of times practically, generally they don't put security guards as employees. They get from a third party agency. Reason being very clear that if any employee is absent for a day, that is okay. But if security guard is absent for a day, that's not at all okay. So when we get one security guard from a third party agency, that is also covered under RCM. Then services of hiring of motor vehicle designed to carry passenger. So in simple terms, renting of motor vehicle. But here RCM will come only when supplier is other than company and receiver should be company. Only then the story of RCM will come into picture. Next point, 16th point, you can see that services of lending of securities. Lending of securities is a new concept which has come up, where what is happening there is that if I have got some shares with me, which is idle, and I'm not doing anything with that, let's say I've got some debentures, I'm not doing anything with that, I can lend that debentures to somebody. I can lend that debentures to somebody through a scheme of SEBI. And for that transaction, who is liable to pay GST is the borrower who is liable to pay GST. That is a concept of lending of securities. Next point, services of GTA, very important. And GTA, guys, let me give you some knowledge with respect to this concept of GTA, because that's very important. So I'll take 2 minutes of your time on the GTA discussion also. Listen here carefully. Because GTA is one thing which is the most practical thing what you will see for RCM. So that's why I'm taking 2 minutes of time there. Listen please. So whenever I talk about GTA, this GTA has got two options. That is, GTA can opt for 12% tax, or GTA can opt for 5% tax. So this GTA has got an option whether to opt for 12% tax rate or to opt for 5% tax rate. Now the point to be noted here is that if GTA opts for 12% tax rate, no RCM. When I say no RCM, that means who is liable to pay GST is GTA only. GTA only is liable to pay GST in case where GTA opts for 12% tax rate. But if GTA opts for 5% tax rate, let me tell you straight away, RCM provisions will come into picture, where recipient is liable to pay GST. And one point is very clear here. Let's say there is one GTA, there is one company PQR Limited. Let's say GTA opted for 5% tax rate, and the value of the transaction is 1 lakh. Now what happens is that on this 1 lakh, PQR Limited, this 1 lakh into 5%, which comes to 5,000. This 5,000 they will directly pay to the government, and whatever they pay to the government, they'll also claim it as input tax credit. Because the logic is simple, because whatever tax is paid under RCM, that can also be claimed as input tax credit. Because as per section 262, input tax definition, input tax also covers any tax paid under RCM. So one of our friends is asking one question related to this. Sir, RCM paid in the month of March is available as credit in the month of April. So how can it be reconciled? Can you help me with that? So my dear friend, let me tell you, practically what we do is that any RCM what we pay, which we can take as credit, we will always show it as an asset. In our books of accounts, we will show it as an asset when we are closing our books, especially in March, because we can take it as credit in subsequent month. And as such, in law, it is nowhere written that RCM tax, whatever we pay, whether we should take credit in same month or next month. But preferably, the practical approach what is followed is that whatever tax we pay under RCM in 1 month, we are taking as credit in next month. Because anyways, whatever tax we have to pay under RCM, we have to pay using electronic cash ledger only. We cannot pay using credit ledger. Clear? Done. One of our friends is asking, sir, can you please go into detail with land development agreement? My dear friend, that topic itself is an ocean topic, which will take some sweet time. But still, I can give you an overview of that for 1 minute, where let's say there is one landlord there. What happens is that there is one developer. This landlord has given his piece of land to the developer, and developer has, let's say, constructed 100 flats, of which 40 flats are given to landlord because he is the owner of the land, and 60 flats are taken by developer. That's why this is called as JDA, which stands for Joint Development Agreement. So if you observe here, landlord has given his land. So basically, it is a concept of service by way of transfer of development rights. So what did landlord give? Landlord has technically given development rights to developer. And for this development rights, developer is liable to pay GST. That is what I just told you under RCM. Actually, who has given rights to whom? Landlord has given to developer. Landlord has given to developer. So, but for this, who is liable to pay GST is the developer, my dear friends, because the transaction is covered under RCM. That's what I've just shown you. But still, let me open that point once again for your benefit. So if you see that point, my dear friend, you can see that point number 9. See that. Service by way of, what is that language? Service by way of transfer of development rights. Transfer of development rights or floor space index for construction of a project by any person to a promoter. When I say any person, of course, it covers the landlords. No doubt about it. Clear? Then, one of our friend is asking question on what amount is developer will have to pay GST. There are specific valuation rules for that, my dear friends, which I have given by virtue of notification. They have given on what value we are required to pay GST. Generally, we look at some value known as at the time of signing the agreement, what was the first price at which we have sold the flat. That value will take into account. And somebody is asking, sir, isn't that service exempt? Exemption is also there, but exemption is limited only to the extent of flat sold prior to completion certificate. The logic is simple because whenever any flat is sold before OC, on that flat, we will pay the GST. But if any flat is sold after OC, on that there is no GST. It is straight away not taxable. So that's what I told you, that this development agreement itself is an ocean topic. So we'll talk that in detail in a separate session. Don't worry. We'll just move out of this topic. So separately we'll talk that. Now let's focus on this GSTR 1 now. Next. So coming back to the RCM points, the last 1-2 points I want to show there. So there are some goods also, my dear friends, which are covered under RCM. That is, number 1, cashew nuts, which are not shelled or peeled. That is raw cashew nuts, which are produced by an agriculturist when it is sold to a registered person. That is also covered under RCM. Second, purchase of BD wrapper leaves. BD is nothing but the tendu leaves. Then purchase of tobacco leaves. Then purchase of silk yarn. Any person who manufactures silk yarn to any registered person. Then raw cotton by agriculturist to any registered person. Then lottery ticket by state government to selling agent. Then finally, 7th point, very popular, especially during Corona days. Purchase of used vehicle or seized and confiscated goods. They'll seize the vehicles, right? Old and used goods, waste and scrap. And that's being sold by whom? Sold by central government, state government, union territory, or local authority. To whom, my dear friends? To any registered person. A lot of times what happens is that if a state government or central government, they have got vehicles with them and they want to replace the old vehicles with new vehicles. That used vehicles, they'll sell to somebody. They'll sell to somebody. Now that recipient is required to pay tax under RCM. Then finally, last point there, this also let me explain. Purchase of priority sector lending certificate. Now what is this priority sector lending certificate? One point is very clear, that every bank out of the total loans what they give, they are required to give a specified percentage out of that loans to priority sector, which is nothing but agriculture, manufacture, and also nowadays startup is also given as a priority sector, where if it's a registered startup and all, banks started giving the loans. But primarily it is agriculture and manufacture. So by any case, if any banks has given an excess loan to priority sector beyond the limit, for that excess whatever they have given, they get one certificate which is known as priority sector lending certificate. This can be sold in the market. Now who will buy? That bank who has given less loans to the priority sector, less than the prescribed limit of loan. That bank will buy this priority sector lending certificate to compensate the loss. Logic is simple. This is something like carbon credit, what you would have heard in case of emission of gas. Same logic here also. If loans are given to priority sector beyond the threshold limit, then very clearly they are given that that bank who has given loans beyond, that bank who has given loans beyond the limit to the priority sector, they'll get priority sector lending certificates, and that can be sold in the market. And who will buy is very clearly the bank who has given less loan to the priority sector. Next. So that's about the story of reverse charge mechanism. Very, very interesting. Now I can happily go back to the GSTR1 and discuss the balance points there, because my logic was simple that without knowing this GSTR, without knowing this RCM and all, I cannot complete that GSTR1 discussion. Yeah. There's one doubt before I proceed. Sir, if a government company take hiring service from GTA, is tax required to pay GST and RCM? If on invoice not mentioned GST and RCM, one point is very clear. If GTA is giving service to government, that is actually covered under exemption list, for your kind information. That's why they don't charge GST at all. Yeah, and they also asked if GTA charge any GST in invoice and also not mention GST and RCM. Practically, GTA always mention that it is under RCM. If they do not mention that it is RCM, then you please check whether GTA charged 12% or 5%. If GTA charged 12%, that means GTA is not covered under RCM. Because I told you that if GTA opts to pay tax at 12%, then the provisions of RCM will not apply. GTA only will be liable to pay tax under forward charge. Because the story of RCM will come only when GTA opts to pay tax at 5%. If GTA opts for 12%, then there is no question of RCM. I'm sure you got your answer. Done. Let me proceed. Let's go back to our presentation, guys. So lot of interesting points we discussed there. See now. See that. Table 4. Taxable outward supplies to registered person including UI holders. What is UI holders? That also I told you there. Excluding zero rated supply and deemed export. What is the zero rated supply? I'll talk later. Don't worry. When I go to the table 6, I'll tell you there. Then all B2B supplies should be mentioned in this section, including all outward supplies on which reverse charge is applicable. Now, what are covered under RCM? I already told you. Now, let me tell you guys, this right side box, what you are seeing, 4A, 4B, 4C, 6B and all, that is how the box looks in the GST portal. When I click that, this will be generated. That's where arrow mark has been given, that the original box, how it looks in GST return, and after clicking that box, how it will reflect. So, I mean, special thanks to my team who have worked on every column minute there, because we have covered a scenario where what happens, how it looks in the portal. When you click that, how it looks. See that there. So, deemed exports, SCZ supplies with payment, SCZ supply without payment, SCZ I will talk separately. Supplies attracting reverse charge. This we will select in case where if it's a supply which is covered under RCM. Then intrastate supply attracting IGST. Generally, intrastate do not attract IGST, but one point is very clear that if it is not covered under any intrastate where specifically it is not covered, then will attract IGST, but that's an exceptional case which is not possible. Generally, for intrastate, we always charge CGST and SGST. Next, is the supply eligible to be taxed at differential percentage? That sometimes may come where different rate is prescribed by the government, that will select. Then what are the columns we have got? Receiver GST number, receiver name will come automatically the moment you enter a GST number. Then invoice number, invoice date, POS. What is POS? Place of supply. Very, very important column. There is no question of moving forward without entering POS because it's a mandatory column. Then total invoice value. Getting clarity, guys? Everyone? Good. Next. Let me proceed. Now, please see what are the details we'll enter here. B2B, when we click add invoice, receiver GST number, invoice number, these points we have seen. And below that, what are the columns we have got? Supplies attracting reverse charge, or is it e-commerce? Then taxable value, amount of tax, cess. And amount of tax, why only integrated tax is there? Because we selected interstate. If I select intrastate, then definitely what will come is CGST and SGST. Clear? And beside integrated tax, there is something called cess, my dear friends. I hope you're able to see that word cess. What is cess? What is cess, guys? Come on. Education cess? Is it so? What is cess? Somebody. The general meaning of cess is very clear, my dear friends. If any tax is collected for a special purpose, then we call it as cess. And the point is very clear here. Cess means GST compensation cess. As you all are aware, my dear friends, that when GST has come into picture, one point is very clear that earlier, prior to GST law, we followed the concept of origin-based taxation. From origin-based taxation, we shifted to destination-based taxation. What is the difference? Isn't it? So let's say if one person of Gujarat sold goods to another person in Maharashtra, one person of Gujarat sold goods to another person in Maharashtra. Prior to GST law, what used to come is CST used to come, which is nothing but central sales tax, which was levied by central government, collected by state government. And which state used to take that money was seller state used to take that money. Who is to take? Seller state used to take that money. But the point you have to understand here is that now, when GST law, we shifted to the concept of destination-based consumption tax, where we know that for interstate supply, we charge IGST. IGST is taken by central government and certain amount will be shared with state. And which state they will share is the state where goods or services are consumed. So we shifted from origin-based taxation to destination-based taxation, because of which lot of states in India, especially states like Tamil Nadu, Maharashtra, Gujarat, they are all very much manufacturing states. They have lost revenue because of introduction of GST. So central government told, my dear friends, don't worry, we will support you. We are introducing one concept known as GST compensation cess, which will keep in force for a period of 5 years. And this amount, what we are collecting as GST compensation cess, we'll use it for the purpose of compensating the states who have lost revenue on account of introduction of GST. This GST compensation cess will be used to compensate the states who have lost revenue on account of introduction of GST. That's it. That's the beauty of this word, compensation cess. Next slide. Next point you see there. POS determines the type of tax to be applied. Obviously, we know that very clearly that one point very clearly there, that if it's intrastate supply, we will charge CGST as GST, intrastate supply will charge IGST. And when we equal supply as intrastate supply, in the location of supply and the place of supply both are in same state, we'll regard it as intrastate supply. But if the location of supplier and place of supply both are in different state, we'll treat it as interstate supply. Clear? See below. You can also see there that once invoices are processed, this is how it looks, my dear friends. We have given table by table, column by column there. Next point you see, when B2B invoices are more than 500, then GST offline utility shall be used to upload invoices on GST portal. That means what happens there is, let me explain this to you. Friends, what happens there is that in general, we can directly log into the GST portal and enter one after other invoice details. That facility is anyways there, where we can log into the GST portal, one after the invoice details we can enter. But let's imagine a case where if the quantum of invoices are 150 to 200, Every invoice you have to enter, every invoice should be processed. It will take some sweet time. And moreover, law clearly told that where invoices are more than 500, you can't even proceed normally. You have to use offline utility. Now, what is offline utility? Offline utility is one such mechanism where you have an Excel file there. You will use that Excel file and you will upload that Excel file. And once you upload an Excel file, one JSN file is created, and that JSN file will upload into the GST portal. Like our income tax will create one XML file and upload, in GST will create one JSN file. Even in income tax, in the new returns, they are coming up with the concept of JSN file only. Going forward, we will file every format in JSN only. JSN stands for JavaScript Object Notation. It's a condensed form where we try to condense the data so that we can upload. And I'll take some time of yours now to explain you how does this offline utility looks first of all. Yeah. So first instance, guys, let me open the GST portal. Guys, are you able to see the GST portal? Please respond. Yes. In this, guys, under downloads option, there is an option called offline tools. There you can go for returns offline tool, and here you have an option of GSTR1, GSTR2 form. Now GSTR2 is not there. Of course, 2A, 2B is there, but for 2A, 2B, we don't do anything. That will automatically come. So here there's an option of download. Once we click that download, I've just done this today also once. So this, like this, one zip file gets created. I hope you're able to see that. Yeah, let me open that. Hold on. So here you're able to see zip file able created. Yes. Yeah. So one zip file gets created like this. So what happens is that you extract that zip file. Once you extract that zip file, my dear friends, hold on. Let me open my desktop also. Just once again, I'll open that file. Hold on. Yeah, so this is my desktop, my dear friends. Here, if you see, what I've done is that offline utility, whatever zip file is created, if I open this zip file, there you can see all these options, my dear friends, which gets created. Please see that what are the options which have been created. You can see there section by CSV files, FAQs and user manuals, and these are offline tool application what you have to run. And this is one Excel template which they have developed, my dear friends. In that template, we will fill the data. And after filling the data in the template, we'll upload that template into the offline tool. Now I'll show you that. Hold on. Yeah. This is how the Excel template looks, my dear friends. Just once again. This is how the template looks, my dear friends, where you can see here, there are various columns here. So basically, whatever columns are there in GSTR1, every column is reflected here. Now, don't think, sir, how data has come automatically. This is a sample data, what they have given in that Excel file, where basically we remove this data and we will take our client data and paste it here. You can use the option of Control C and Control V. It will definitely work. Don't worry. And there is every column for B2B, B2C large, B2C small, credit notes, debit note. For everything, there is an Excel column there where we will fill all those Excel columns and get this Excel sheet ready. And once that Excel sheet is ready, my dear friends, what happens is we'll open our offline tool. Let me open the offline tool also for you. 1 second. Guys, is my voice audible now? Yeah, thank you so much. So if I share the screen, guys, so this is how the offline tool looks. The size could be very small, but I really want you to adjust there. So if you see there, guys, there is an option here, upload new invoice or other data for return, where I'll click this button of new, where you can see here GSTR1 or IFF. And here I'm required to give the details of GST number of the supplier. Let's say I'll just give one sample GST number here. Financial year I'll select, May month I'll select, is SCZ taxpayer, I'll select it as no. Yeah. So once you select these options and proceed, my dear friends, we'll click yes. I really want you to see some interesting point here. Here is an option known as import files. When I click this option of import files, you can see here import returns all sections in one go, where we'll import Excel. Now don't ask where is that Excel. We already have seen that we have that Excel utility there, that Excel file in which we enter all the data related to that P2B, B2C, all the data we enter there, and we click that button of import Excel and we'll view the summary, and the summary gets generated here. Then what happens is that we'll create that JSN file, like how in income tax we create that XML file. Now that also became JSN file, where we create the JSN file and we can go there and upload in the GST portal. Let me show you that also once. So when I go to the GST portal like this, so the services option, returns, return dashboard, where I'll select my GSTR1. And here you can see two options there, prepare online, prepare offline. I hope you have observed the options there. Still, let me open that once again. Prepare online, prepare offline. Online in case where directly we are opening and keying in the data. It's not necessary that you should definitely use offline tool. One point is very clear, that where the data quantum is high, especially my recommendation is that where you have invoices like 50, 60 invoices or 80 invoices, 100 invoices, and if it's more than 500, then obviously offline tool is mandatory. And practically people use different softwares for the purpose of filing, but it's not necessary that you are required to use any software for that. We can happily use this GST offline utility what government has developed, which works really well. Using this offline tool, we can import the data to an Excel. Simple. First, bring all the data into Excel. That Excel file you import into the offline utility, then view the summary, generate JSON file, and go here, prepare, click the button, prepare offline. You have an option invoice upload. You will choose the file and submit the returns. Choose the file. Automatically you will choose the file. What file you will find? Obviously you will find the file of JSN file, what has been created. Click that and submit that file. And whatever you have entered in that Excel sheet will now get populated into the GSTR1, this particular return. And the logic is simple here. This process of offline utility is only to make our life simple and easy. That's all, nothing else. And by any chance, in offline utility itself, what happens is that when you create one JSON file, there is a possibility that some error or some mistake would have come. Possible. That's where we will validate the JSON file in that offline utility only. I want you to read this language here. I'll just read out now. I just want you to look at the scrolling what comes there in the GST portal. Please look at that scrolling interesting point. See that. In case of uploaded data, invoice data or other records, fails what? Validation. That means there is some error. An error file will be created on the online portal for only those records which fail. And what we should do now? We'll download that error file and open that error file again in offline tool only and we'll correct it. And after correcting it, we'll again upload. The point is very simple, my dear friends. Let me simplify the process once again to all of you. If let us say the invoices are only 10-15 invoices, there is no requirement to use offline tool at all. Directly what you can do is that you can manually online itself, one after other invoices, you can upload there. Enter the details there. Second option is that you can download the GSTR offline utility, wherein you will find one Excel file there. In that Excel file, you will key in the data, punch the data into that Excel file, and you will use that offline utility software where you will import that Excel file. After importing the Excel file, you will generate JSON, and that JSON is uploaded into the GST portal. That is what happens there. Now, for simplicity, for all our friends, let me explain the process once again. One of our friends is asking one doubt. In offline utility, exempt supply will not be available. I agree, exempt supply, one part is not available in offline utility, that will manually enter. Sir, can you please re-explain offline utility process? Yes, that's what I'm going to do now. Please concentrate. Yeah, see here. So friends, what happens is that to file GSTR1 or basically to enter data in GSTR1, so in simple terms, I will say to prepare GSTR1, you have got two options. One, straight away online. Second option, offline. Online means directly enter the data. Directly enter the data online the website itself. If it is offline, first thing what you have to do is that step number 1, download utility, and in utility extract the file, and once you extract, you will find there Excel files, and you will also find offline software. And this offline software, what you have got, install that software. And after you install that software, how does it look? Already I've shown you that. Now what you do is that open this offline software utility. There you import the Excel file. And once you import Excel file, we'll click the button of view summary to just check whether the entire data has come or not, or if something is missing. Clear, my dear friends? Then we will generate one file known as JSON. Now, what is JSON? Don't get one doubt. JSON file is only a compressed form of data. See, entire data, whatever is there, if every person will start uploading the raw data, then gone. How can government take that much data with them? There should be some data available with them, right? Space should be available on the server to take that much amount of data. So this JSON is basically a compressed form of data. Now what I'll do after I generate JSON file, after this, the next step activity is log into GST. There under GSTR1, under the option of prepare offline. Prepare what, my dear friends? Offline. Under prepare offline, we will upload JSON file. What is that we are doing there? We are uploading the JSON file. And once we upload the JSON file, automatically what will happen is data reflects in GSTR1. And by any chance, if you do something wrong, then some error file will get created, and that error file we can again go and open in offline utility and then check what is the error which has come up, rectify that error, and again repeat the same process of generating the JSON file, uploading that. You can see right side once again. I'll take you through the process once again. Please see that. Download the utility, extract the files. You'll find Excel files there, offline utility software. And that offline software you have to install. And what you have to do is in that software, you have to import the Excel file, then view the summary, and then generate the JSON file. After generating the JSON file, we will log into the GST portal, and in the GST portal in GSTR1, we'll click the option of prepare offline, and there we will upload the JSON file. And after we upload the JSON file, the data will then come and reflect in GSTR1. This is what is the process which happens in case of offline utility. Very interesting, and of course something which makes sense, especially in case where number of invoices are more. It's a very simple process. Just that in Excel we are entering the data, importing that into that offline utility, and creating the JSON file. That's it. As simple as that. Like how I've shown you just now. Clear? That's what I just want to tell you, that in case where invoices are more than 500, offline utility is mandatory. And if it's less than 500 also, you can still use offline utility. And it's very good software which government has developed, which works really well. Clear? Done. Let me proceed. With our PPT, there are a lot more interesting points to talk. Let me open the presentation once. Hold on. Yes. So any other query raised? What is JSON file? I told you already that it's a compressed form of data. Yes. So I'll share the screen and proceed. Yeah. Next point, guys. See here. Table 5, taxable outward interest rate applies to what percent? Unregistered person where invoice value is more than 2.5 lakhs. Technically, what do we call it? Technically, we call it as B2C large. And B2C large covers only interstate outward supplies where invoice value is more than 2.5 lakhs. That is only covered in B2C large. And the difference is that in B2C large, we are required to report invoice-wise details. We cannot report consolidated details. We have to report invoice-wise details. Next, read that line there. Invoice-wise details are required to be reported. Invoice-wise details of all supplies made to unregistered dealers is to be mentioned here. You can see here B2C large. So this is how it looks. And once we click that, this page will pop up. And you should not get found out why only IGST is there, why not CGST, SGST. Logic is simple. Why no CGST, SGST? Because this is when we are talking about B2C large. That is B2C large covers only interstate supplies where invoice value is more than 2.5. When it is interstate, there is no question of CGST, SGST. Yeah. One doubt in the chat box. Sir, can we upload 250 in online and 150 in offline? Yes, my dear friend, you can do that. But my suggestion always is that please either use offline, online or offline. One thing you use, but you can use both. But please make sure that before submitting your GSTR1, check whether entire data has come correctly or not. A lot of times it happens that initially what has happened, I'll tell you one practical case what I myself experienced. In one of my client case, initial, way back in July 2017, what has happened is, initial first month of GST, we used offline utility because 600 entries were there. So we used offline utility, submitted the data, and one error has come saying that no invoice is uploaded. That happened. Second time we uploaded again. And to our surprise, what has happened is we click the submit button. After we click the submit button, we saw that 1200 invoices reflected in GSTR1. And one point is very clear that GSTR1 once filed cannot be changed at all. If we do any mistake, next month we should rectify that under amendment column. I'll show you that where is that column. So instead of filing 600 invoices, we have filed 1200 invoices. Next month, for every invoice, we have shown credit note there. Credit note because we have to reduce the value of tax. We know that value of tax, if you want to reduce, we'll definitely give credit note. For increasing, we'll give debit note. So my suggestion always is that you can use online, offline both, but ensure that before submitting, you will check the data for sure. And then only submit, because any mistake proves costly again. You have to wait for 1 more month to rectify that mistake. It's not something which you can rectify just like that across the table. Clear? One student has sent a message to me, sir, how to file GSTR1 nil return? Very good. Nil return, no data, directly submit it and file it. That's all. But one point is clear, which I'll tell you now, that when you want to file this GSTR1 or GSTR3B, in case of companies and LLPs, digital signature is mandatory. Digital signature is mandatory only in case of companies and LLPs. But for other than companies and LLP, we can file through EVC. That's like OTP. EVC means electronic verification code. One OTP, one-time password, will go to the mobile number given in the GST portal. At the time of registration or subsequent amendment, we would have given one mobile number, right? To that mobile number, one OTP will go, electronic verification code will go. We'll enter that code and file it. Getting clarity? Ja. Next. Next point. Table 6A, very, very important. Export invoices. Guys, one point I want to tell you here in export invoices. Before that, one more query there. Sir, what is the process in case of e-invoices are applicable? Will the invoices be auto-populated in GSTR1? See, my dear friend, the concept of e-invoicing, where electronically invoicing, where this concept was originally applicable to those whose turnover was more than 500 crores. Then it was made applicable to those whose turnover is more than 100 crores. Recently, this concept of e-invoicing is made applicable to every registered person whose turnover is more than 50 crores. What they are required to do is that their invoice details they have to enter in the e-invoicing portal and generate one IRN, invoice reference number. So once the details are entered in the e-invoicing portal, from there, the data is automatically populating in GSTR1. But I have seen a couple of practical cases where entire data is not coming in GSTR1. One client case, what happened? There were almost close to some 650 invoices, which were e-invoicing was also done. But only 646 invoices have automatically auto-populated in GSTR1. 4 invoices were missing. I raised a complaint and grievance on GST portal. I asked them what is the reason. They told some technical issue is there. Now what is the option left for me? The only option left for me is very clearly the balance 4 invoices I manually entered. That's it. In one case I've seen, but majority cases, it will automatically populate from e-invoicing details there. I'm sure we are clear. Yes. Next. All types of export invoice have to mention under this head. A registered dealer have to give details of invoice, bill of export, and shipping bill. What is difference between bill of export, shipping bill? Shipping bill is a document in case of vessel or aircraft, and bill of export is in case of vehicle. When goods are exported through vehicle, there is one document known as bill of export. But when goods are exported through vessel or aircraft, there is one document known as shipping bill. Next point. Enter the details of each of the export invoice. Input information like invoice number, invoice date, port code. Port code you will get from the shipping bill. Shipping bill number, bill of export, shipping bill date, invoice value, GST payment, and amount of tax. And you have to ensure that all information provided in this form matches with the shipping bill or bill of export filed with customs department. And any mismatch in details can lead to delay in processing of refund. Highly possible, because what happens in exports, because, sir, there is one point known as zero rated supplies. There are 2 things which are covered in zero rated supplies. Number 1, exports. Number 2, supplies to SEZ. These 2 are covered under zero rated supplies. What happens is that practically there is one concept known as zero rated supplies under LUT, letter of undertaking. That means Shivateja, who if I am an exporter, I can apply for LUT online. If I apply for LUT online, what happens is that on exports, whatever I am doing, I will not pay tax. I will not pay any tax at all. But whatever tax I have paid on my inward supply, that tax what I paid on inward supply, I can happily claim it as a refund. And this is the beauty in zero rated supplies, where we do not pay output tax, but we can still claim refund of the tax paid on inward supply. The input tax credit, we can claim it as refund. That is the beauty of zero rated supply. So it is very important that we properly give the details of export invoices. If we do any mismatch, then gone. Refund issues will come. So it is very important that export invoices should be reported under export invoices column only. We cannot report wherever we want. Next. Next point, B2C others, small point. Yeah. Before that, one of our friend is asking, sir, what is the benefit of LUT or exports with GST? There are two options that you can go for exports without payment of tax under LUT, or you can go for with payment of tax. When you go for without payment of tax, you will not pay output tax, you will straight away claim refund. If you go for with payment of tax, you have to pay the tax and then claim refund. Your money will get blocked. But the only difference, practical point, let me tell you, in case of with payment of tax, you can also claim credit related to capital goods also. That is a benefit. But now practically it's gone. In the recent Finance Act, they removed the concept of export with payment of tax. You should have the only option to go for exports without payment of tax under LUT only. That is the only point. I hope you are clear, my dear friend Jeevan. Yeah. One more question. Sir, for zero rated supply, where credit will come? Cash ledger or credit ledger? Of course, credit ledger. In zero rated supplies, the point is very clear that why credit will come means, for example, I procured some goods within India on which I paid the tax. That same goods I exported. That same goods when I export, on export I will not pay any tax. But whatever tax I paid on inward supply, that I claim it as refund. And that balance is there in which ledger? Electronic credit ledger. Because it is my input tax credit. It is not what I paid from my pocket. Whatever I paid from my pocket, that only will come in cash ledger. Whatever is my input tax credit, that will come in electronic credit ledger only. See that. Table 7, B2C others. Taxable supplies to unregistered person other than supplies covered in table 5. This section contains a rate-wise summary of all B2C supplies made during a month. And in the bracket, you can see net of debit note, credit note. Debit note, which increases the tax, credit note, which reduces the tax. B2C intrastate supply along with place of supply, that is name of state, where invoice value is up to 2.5 lakhs. Because if it is more than 2.5 lakhs, it anyways comes under B2C large. Next, in this table, the consolidated details like total taxable value, you can observe that word consolidated details. I told you that too already. Amount of central tax, state tax, or unitary tax, integrated tax, and cess has to be filed. There is no need for details like invoice number, invoice value, rate, taxable value. All these are not required. Taxable value, of course, will show, but more or less, it is a whole total value, not individual item wise or invoice wise. So we'll click this first, then these details are generated, and once we enter, this is how it looks. State wise, rate wise, total value, no individual item, integrated tax, central tax, state tax. This is how it looks. Every table wise, how it looks, we have covered there. I'm sure this point makes sense for everyone. John, let me proceed, guys. Next point there. Please see there, come on. So we have discussed about B2C small, that is others, basically. Next. If you see here, table 8, outward supplies that are nil rated, exempted, and non-GST. First of all, one clarity should come on what is the difference between nil rated, exempted, and non-GST. First of all, we know one point that non-GST means those which are not covered in GST. Example, alcohol, liquor for human consumption, and that 5 petroleum products which are temporarily outside GST now. Now, what is exempted? Exempted are those where there is a rate of tax, which could be 5, 12, 18, or 28. There is a rate of tax, but they are presently exempt by virtue of a notification. That means it is taxable, but it is exempt because of a notification. And nil rated is a case where the rate of tax is 0. 0 rated is different, nil rated is different. Because in nil rated, we do not pay tax and we can't take input credit. But in zero rated, we do not pay output tax, but we can still take credit. And what is covered in zero rated is only two things. As I told you very clearly, there are only two things which are covered in zero rated supply. Number one, exports. Number two, supplies to SEZ. And here, all supplies nil rated, exempted, non-GST. And that too you can see intrastate to registered, intrastate to unregistered, interstate to registered, interstate to unregistered. These are reported column wise. Will report the details of nil rated, exempted, as well as non-GST, my dear friends. Next point you see here, one small table is there. Non-GST supplies, only those supplies that are excluded from scope of taxation under GST are covered by this definition. Example, alcohol, liquor for human consumption, petrol. Then exempt supply means supplies that are wholly or partially exempt from CGST or IGST by way of notification. Please understand that exempt supplies are those which are actually taxable but which are exempt because of a notification. Example, milk, fruits, curd, bread, etc. Nil rated is not defined anywhere in GST law, but you can see one line there. The basic difference between nil rated and exempt is that the tariff is higher than 0% in case of exempt supply, but nil rated, the rate is only 0%, but there is no tax payable due to notification. Whereas in case of nil rated, the tariff itself is nil rate, like salt, food grains, jaggery, etc. This case it is nil rated. So please understand that nil rated is different, exempted is different. Exempted are those cases where there is a rate of tax. For example, rate could be 5% or 12% or 18%. Rate of tax is there, but it is exempt only and only by virtue of a notification. But nil rated are those where the rate of tax is only 0%. The rate of tax is only 0%. Exempted, the rate is not 0. The rate could be 5, 12, 18, whatever could be the rate. But it is presently exempt because of notification. That point you have to understand there. Next, moving forward. Next point. Table 9A and 9C. This is all about amendments, my dear friends. As I told you already, if there is any mistake, what we have done in particular month, we cannot revise the return. In next month, under amendment column, we have to rectify that mistake what we have done. And the mistake could be in terms of value or in terms of GST number, or it could also be in terms of tax also. Amendments to outward supply that are taxable and reported in table 456 of earlier tax period GSTR1, not present tax period, because amendments we can do only for previous month. Current month we cannot do amendment because once we file, it cannot be revised. See here, taxpayers shall use this table for making amendments in details of outward supplies already furnished in the returns of prior periods by selecting the financial year from drop-down list, along with invoice number, which is to be amended. Obviously, for B2B, invoice number will give, because B2C already, B2B already we would have given invoice wise details, and we'll click that button of amend invoice. And once I click that amend invoice, these details will come. There you can see that receiver name, receiver GST number. You can see that revised original invoice number, revised original invoice date, then revised invoice number, revised date, which is a star mark there. Revised invoice number, revised date. You can see that it is highlighted in red because that's mandatory. And total invoice value. So that's how we can do the amendments. So 9A, amended B2B invoices style in GSTR1 will reflect the number of invoices which are amended along with total tax liability. And by any case, because of amendment, if the tax liability has increased, then we have to pay that differential tax. And obviously, the payment story will come in GSTR 3B that we'll talk in next session. Next point. B2C. Previous point was amendment for B2B. This point is amendment for B2C large. And B2C large is, of course, table 5. Table 4 is B2B. Table 5 is B2C large. Then B2C invoices, same story. We'll enter that details. Whatever mistake they have done, we'll amend it. And you can read the same line. Taxpayer has to pay tax only on the differential tax amount. So because of amendment, if any tax liability arises, that tax has to be paid. No option at all. Then 9A, amended export invoice. There is also a possibility that while entering the export invoice details, we would have made some mistake. That also may be amended. So there is a possibility that we might amend B2B invoice, we might amend B2C invoice, we might amend export invoice. Amended export invoices. Taxpayer shall use this table for making amendments in details of outward supplies already furnished in returns. Table 6A. 6A only, right? Yes. Amendment procedure is same as B2B and B2C. And next point, amended export invoice style will reflect number of invoice amended along with total tax liability. And taxpayer has to pay tax only on the differential tax amount. Next. Same story, 9C, amended credit note or debit note for registered, for unregistered. There is also a possibility that credit note, debit note amendment could be there, and credit note, debit note could be related to registered person or unregistered person. That is B2B credit note or B2C credit note, B2B debit note, B2C debit note. And logic is simple. Credit note is a document given for the purpose of reducing the tax, and debit note is a document given for the purpose of increasing the tax. This point we clearly discussed, my dear friend. Next, before I proceed, one doubt in chat box. Sir, can we amend the GST number and receiver name? Yes, my dear friend, we can amend the GST number and receiver name. Definitely possible. Next. Next point, advances received. This point is very interesting, guys. Let me take a small example here to give you clarity on this point of amendment point, because that is a very valid practical point. Listen carefully here. Yeah. Sir, I hope the data screen is visible. The content where I'm writing. Yes, I'll proceed. So listen here. So what happens very clearly is, my dear friends, for example, let's say there is a real estate company. What company, guys? Real estate company. This person decided to sell one flat for 1 crore. And customers started paying 30 lakhs advance in the month of July, 20 lakhs advance in the month of August, and straight away the balance 50 lakhs he will pay in the month of September. Clear? Everybody? Now, when the real estate company, what has happened is that when they receive the advance, they will not give an invoice. What they give is only a receipt voucher. Receipt voucher is a document given for the purpose of advance receipt. What they received is only an advance. So for advance, they don't give an invoice, they give a receipt voucher. So far, there is no invoice given. So it is not a B2B, it is not a B2C. Then for that purpose, there is a separate table known as table 11, where we will report the advances what we have received, on which we will definitely pay GST. Because with respect to advances for services, GST liability will come when advances are received. And the interesting point you have to note is that in July month, we will show 30 lakhs in advance column. In August month, in advance column, we will show 20 lakhs. But in September month, the real game starts, where 50 lakhs we have received. And what happens is that for 1 crore, invoice is given to customer. Invoice is given to customer. Out of this 1 crore invoice to given to customer, 50 lakhs is advance already received. And the balance 50 lakhs will be in current month. So basically, we will report very clearly out of the invoice what we have shown, what is that amount of advance already we received, on which already we have paid GST. Because out of 1 crore invoice given in September, 50 lakhs advance is already received, for which already GST is paid. Now balance 50 lakhs only is subjected to tax in the month of September. In September, again we will not pay tax on 1 crore, because for 50 lakhs already GST is paid. Getting clarity, guys? So it's important to note that receipt voucher is given in case of advance received. Yeah. Couple of doubts. One doubt, performance invoice is sufficient for GST. No, my dear friend, generally what happens is for advances, we give receipt voucher. Then one question, sir, if B2B, I have shown under B2C, Possible, my dear friend? We can do the amendment. What happens is that in B2C, we will reduce the value what we have shown. For example, in August month, we have to show B2C of 100, but we have shown 120. So in September month return, we will amend the B2C of August and show it as 100. And we will add a fresh B2B invoice. So basically, we will reduce the B2C figure of August and add a new B2B invoice in the month of September. That's how we can do amendment for converting a B2C to B2B. Possible. I hope we are clear, my dear friend. Next, 1-2 more queries. Sale of building or land is outside the scope of supply. Yes, my dear friend, sale of land and building is exempt under GST. However, one point you have to know is that in case of apartment or in case of construction of a building, if the amount is received prior to completion certificate, then definitely GST will apply. But if the entire amount is received, I repeat, if the entire amount is received after completion certificate, then there is no question of GST. But if the amount is received prior to completion, then GST will come into picture. Next. Can we really claim input tax credit regarding stay in hotel as it is personal but not for business? My dear friend, let me tell you, if it is business only, we'll take credit. If it is personal use, we can't take credit. It's a block credit. Anyways, next session we'll talk about 17.5 block credit, where I'll tell you that if anything is related to personal use, it is clearly a block credit. Next. In September, in which table balance 50 lakhs is shown? My dear friend, let me tell you that balance 50 lakhs, we will not show under advance received again. Directly in B2B invoice or B2C invoice, we will show 1 crore. And in advance column, in advance adjusted, we will show 50 lakhs. Because out of that 1 crore of B2B or B2C, 50 lakhs is already adjusted. I will show that adjusted table. 50 lakhs adjustment column will show. And the balance 50 lakhs will now pay tax and report in GSTR 3B. Then, next question. I can get the output tax and input tax amount details for required financial year under tax liability and ITC comparison in GST portal. Likewise, I am not able to get outward supply amount like taxable supply, nil rated, exempted for the financial year. Can I get these details? No. In the GST portal, only taxes comparison is given, but values comparison is not given in GST portal. That you have to download every month and you have to prepare on your own. Nothing else can be done. Yeah, next question. Sir, if only advance is received before completion, whether you have to pay tax or not? Yes. Yes, my dear friend. So, for example, if flat is for 1 crore, 30 lakhs is received before completion, 70 lakhs received after completion, but still GST will come on 1 crore, not on 30 lakhs. Please understand, if 1 rupee also advance is received prior to completion, then GST will apply on entire value of sale of flat. If entire amount is received after completion, then only GST will not apply. Even if 1 rupee also is received prior to completion, even if 1 rupee also is received prior to completion, then GST will apply on the entire sale consideration. And we will pay GST as and when the amount is received. That you need not worry. Clear? Yeah, next. Let's proceed. Yeah, all queries solved. Let me go back to my presentation. All the supplies for which advance were received from the receiver of supplies, but invoice was not raised, will be entered here. Obviously, I told you that we will only show the advance details here. We will not show the details of invoice details. Next, adjustment of advance. This is what I was trying to tell you here. Read that content there, very important content. Details of all invoices raised in the month for which return is being filed. But advance was received and tax was already paid in the previous months has to be entered here. That is what is the meaning of adjustment of advance, which I already explained to you. Next, one more query raised. Is GST applied even for unregistered person in case of sale of flats? Yes. I mean, if you're talking about the builder being unregistered or builder being registered, if the builder is registered, then he has to pay GST. If the builder is unregistered, there is no GST at all. And whether registration required or not, already we discussed about the story of 20 lakhs and 10 lakhs for Manipur, Mizoram, Nagaland, Tripura. I hope your query is about the builder or customer. Whether customer is unregistered or not doesn't matter. If the builder is registered only, he'll pay GST. If the builder is unregistered, there is no question of GST, obviously. And whether to take registration or not, it is just 20 lakhs limits there. If he is building an apartment and flats, what is 20 lakhs for him? That's why practically we don't see a case where builder is unregistered. That's not possible. Practical case. Next. 11A, 11B, already I discussed that with you. Enter place of supply, where supply was delivered, and then IGST, CGST, SGST will be calculated automatically based on type of supply. Intrastate, CGST, SGST, interstate, IGST. Next, one more doubt. How to rectify if by mistake instead of entering 30 lakhs and 20 lakhs under advance received, I mentioned under adjustment of advance. There is a column for amendment for this also. Next point, I'll show you that only. There's an option of amendment of advance received also, my dear friend. That also we can do, because advance also their mistake can happen. That also can be amended. No problem. Next, one more doubt. Sir, what is the logic behind no GST if entire amount paid after completion? My dear friend, if after completion is completely done, it is a pure sale of land and building. And in case of pure sale of land and building, there is no GST. As per section 7(2)(a), read with schedule 3, sale of land and building is neither regarded as supply of goods nor supply of service. So if it is not a supply of goods, not a supply of service, there is no question of GST at all. That's the whole logic there. And if it is before completion, it is as good as giving construction service. That is why GST is applicable there. Next. Table 12, HSN summary. I hope you know that for every good, for every particular good, there is a code known as HSN code, that is Harmonized System of Nomenclature, which is 8-digit code. And for service, there is one code known as SAC, which stands for Service Accounting Code. See that GSTR1 return requires a dealer to provide HSN summary of outward supplies and rate-wise details along with quantitative details. That is why we are giving these details. Following details are to be given: HSN code, description, UQC. UQC means unique quantity code. Is it kgs or liters or grams or milligrams? How is it? Then total quantity, total value, total taxable value of outward supplies, and type of sale made, that is intrastate or interstate. And the practical point, even without filling the HSN details, we can still submit GSTR1. But our recommendation, and practically, of course, what I also follow is that make sure that we always submit HSN details. It will be very useful for subsequent confirmation. And wherever turnover is more than 5 crores, we always recommend definitely you file HSN details. Finish. Next. This is how the table looks after we fill that details. Example. Last table in GSTR1, table 13, my dear friends, which is related to the documents issued, where we are just giving our invoice number. What number to what number we have given, that details we are giving. So for example, invoice number 25 to 45 we have given. 25 to 45 total 21 invoices, of which how many are cancelled, how many net issued. Basically, government wants entire information. Invoices, revised invoice, debit note, credit note, receipt voucher, payment voucher, refund voucher, delivery challan, all the details we have to give. And you can see one circle what I wrote there. Every taxpayer is required to provide details of documents issued during a particular month. And there are 12 categories of documents as follows. This is all about GSTR1, where we give all the details related to outward supplies. B2B, B2C, credit note, debit note, advance received, advance adjusted, HSN summary, and table 13, documents issued. Then finally, IFF, invoice furnishing facility. This concept I already told you that this is only in case of QRMP scheme, quarterly return monthly payment scheme. Simple terms, let me explain this to you first. Then I'll show you the presentation. Yeah, hold on, please. 1 second. Yeah, let me. One question before I proceed. What is the difference between e-waybill and delivery challan? Sorry, madam or sir, whoever it is. E-waybill is a concept which has to be generated on the e-waybill portal, which is applicable wherever invoice value is more than 50,000 or consignment of value of the goods more than 50,000. But delivery challan is document which is given instead of an invoice. Invoice is given whenever a transaction is taxable and if there is a supply. And if it is not a supply, in that case, we give a delivery challan. There is a movement of goods, but it is not supply. Then we'll give delivery challan. Another question, sir, can we maintain multiple series of invoice for every location in state? Yes, my dear friend, you can happily do that. Multiple series is okay, but it has to be serially numbered. That is important. Serially numbered is important. Next, one more question. Sir, I am unable to generate JSN file or GSTR1 workbook template. I am using CSV files. How to file workbook template? My dear friend, the point is very simple. In offline utility, where B2B separately you can upload, B2C separately you can upload, every column you can upload separately, or you can combine everything and at a time you can upload. Sometimes if error is coming at a time, one after the B2B, B2C, one by one, you can keep uploading. That option is also there. Don't worry. Yeah, next. Guys, I'll take little more time of yours today because I've got something to talk about QRMP scheme also. So let me continue. I hope you can give me some more time. Thank you so much. Yes. So friends, for example, let's say there's one person who's under QRMP scheme. One person, Mr. A, whose turnover does not exceed 5 crores. And this man opted for a QRMP scheme. Listen to this carefully. With this, I'll give you a complete concept there. Listen. So 5 turnover does not exceed 5 crores. He has gone for QRMP scheme. Now there is Jan 21, Feb 21, March 21. Now what happens is that in Jan 21, he will use IFF, invoice furnishing facility, and he will report only the B2B invoices. February also only IFF, B2B invoices. And the due date is very clearly what, my dear friends? 13th of next month. And for March month, what he will do is he will file GSTR1 where he will show B2B of March and B2C, of course, of Jan to March. He will not just to show March, he will definitely show Jan to March because in Jan and Feb in IFF, we have not reported the details of Jan, Feb, we have not reported the details of B2C. We just reported details of B2B only. Getting clarity, guys? It's an important point to be noted that very clearly B2B details are only given in IFF in Jan and February. So for March month, in GSTR1, when we are filing, we will show B2B of March and also B2C for Jan to March. Very, very interesting point there. Next, another point, let me tell you here that what they told in the law is for January month and February month, when they are only doing IFF, these 2 months, no GSTR 3B, obviously because name only says quarterly return, monthly payment. But even though it is quarterly GSTR 3B, which we will file on quarterly basis, payment has to be done through monthly basis. For the purpose of payment, my dear friends, we generate one challan in one form known as GST PMT 06. In that, we enter the details of CGST, SGST, what we are trying to pay. We enter the details and make the payment. And once we make the payment, the amount will come and sit in electronic cash ledger. That's all. The government idea is simple that please make the payment and let the balance come and sit in electronic cash ledger. That's what we want you to do. Clear, guys? And one more special point, let me tell you here, that in this concept of QRMP scheme, for first 2 months, for the purpose of payment of tax, you have got 2 options. One, self-assessment method. Self-assessment method means straight away calculate. You yourself should do. Name only says self-assessment. You do by yourself. Calculate output. Calculate input tax credit. Net to figure. This figure you deposit in electronic cash ledger by using the option of PMT 06, of course. Clear? And other side, we have got one more method known as fixed method. And this fixed method, what they told is 2 points. For example, when we are talking about Jan to March, Jan to March. What has happened here is that Jan to March, of course, we're talking about Jan to February, Jan and February, because first 2 months we are discussing. Now, October to December, we would have followed quarterly basis, or we would have followed monthly basis. Now, what they told is that if you followed monthly basis, last month, whatever you paid, 100% of tax paid in last month, you pay in January also. So in simple terms, whatever tax you deposited in cash ledger for December month, you deposit the same thing for January month also. I gave it numbers, don't worry. I'll show you the numbers and example. And if October to December was quarterly, then for January month, you please pay 35% of tax paid for October to December. Logic only says October to December is 3 months. They are telling whatever tax you paid for that 3 months, that into what percent? 35% you will pay for Jan and February. This story will not come for March, because March month quarterly has already come, quarter is coming to an end. So we'll show all the details there. There is no question of 35% story coming into picture. 35% story will come into picture only for Jan and February month, but not for March month. No doubt about it. Getting clarity, guys? Come on. Now I'll show the presentation. I gave some very good examples there. There you will get much more clarity on these examples with numbers I have given there. Please see that now. See that. Invoice furnishing facility, IFF. Invoice furnishing facility is an optional facility, but I've already told you, even though it's optional, it is something like mandatory only, because if you don't submit details in IFF, the recipient cannot see in 2A and 2B. So it's an optional facility made available to registered persons under a QRMP scheme. It is a facility where registered persons for each of the first and second months of a quarter can furnish details of the outward supply to a registered person as he may consider necessary between first day of the month, succeeding month, till 13th day of succeeding month. And an interesting line you see there, the said details of the outward supply shall however not exceed the value of 50 lakh rupees in each month. The logic is simple. 50 lakhs into 12 comes to 6 crores. If it is 6 crores, where is the question of IFF? Because IFF story will come only for QRMP. QRMP is only for those whose turnover is not exceeding 5 crores. That's why they told details in any month should not exceed 50 lakhs. And this is given by circular number 143 by 13 by 2020. Next. Invoice furnished in IFF shall be reflected in GSTR 2B of the concerned recipient of relevant month of the quarter, and remaining invoice furnished in GSTR 1 shall be reflected in GSTR 2B of the concerned recipient of the last month of the quarter, because GSTR 1 will file only for the third month. First and second month will only file IFF. Then details of invoice furnished using set facility in the first 2 months are not required to be furnished again in GSTR 1. Already I told this to you. Next. See that this is how the IFF looks, guys. B2B details submitted in IFF will be reflected in 2A, 2B. Taxpayer has to deposit tax using PMT 06. And one point is very clear that PMT 06, what is the due date? By 25th of the following month for invoice reported in IFF. And you can see only 4 columns there. B2B, credit note, debit note registered, amended B2B, amended credit note, debit note registered. There is no column for B2C at all. Logic is simple, because in IFF will only show B2B invoices. So these are the tables available under IFF. Next. Taxpayer can either pay monthly tax liability either in fixed sum method, also popularly known as 35% challan method, or self-assessment method. Now see there, challan we can select monthly payment for quarterly return or any other payment. Challan type 2 options, 35% or self-assessment. Now see some examples here, also with numbers. Taxpayer must pay an amount of tax mentioned in pre-filled challan in PMT 06 for an amount equal to 35% of tax paid in cash. But this 35% story will come when, please see, who furnished 3B quarterly for the last quarter. If last quarter 3B was filed quarterly, then 35% of tax paid in cash in the preceding quarter. And who furnished 3B monthly basis, 100% of tax paid in cash in the last month of immediately preceding quarter. And this method would not be available to those who have furnished returns for who have not furnished return for a complete tax period preceding such month. So previous returns should have been filed to avail this method. Now see some examples here. Scenario 1. Last quarter filing is on quarterly basis. If it is quarterly, what concept will follow? 35%. See that tax paid in cash in Jan to March quarter, 10,000, 10,000, 20,000. Now tax required to be paid in each of April and May, 3,500, 3,500, 7,000. Why? Because it is 35% of tax paid during Jan to March quarter. Scenario 2. Last quarterly filing is on monthly basis, 3,000, 3,000, 2,000. Now what you have to pay is 3,000, 3,000, 2,000. Because 100% of tax liability paid in last month. 35% story will come only when previously you followed quarterly. I hope the example gives tremendous clarity there. Next. Self-assessment. You only calculate. Registered person can also pay the tax due by considering the tax liability on inward supplies and outward supplies and input tax credit available for every month. Taxpayer has to manually, he himself should calculate. That's why it's known as self-assessment. Manually arrive at tax liability for the month and has to pay the same in form GST PMT 06. Next point. Example, one example as to how do we pay the amount. Here you can see for 1 month it is 10, 10, 20, 40,000. And input credit you have got almost about 14. You have got credit more than output tax. So no amount is required to be paid. And if credit is less, you have to pay the amount. And how to pay and all, we'll talk in detail. In GSTR 3B, how do we utilize that credit? Set off of that credit, we'll talk in next session in 3B. Next. Yeah, 1, 2 questions. Is QRMP option to be opted by taxpayer online? Yes, my dear friend. Or it can be obtained in the middle of the year. Generally, no. Generally, we have to obtain in the start of the year. For new registration, will IFF come? It's only optional, whether you can go for QRMP or you can go for normal. No problem. Next. PMT 09. So this is one new concept which has come up, my dear friends. We know that in electronic cash ledger, we have got some balance with us. What happens is that while making the deposit in cash ledger, we have got some columns like tax, interest, late fees, penalty. By mistake, instead of paying under one column, if we would have paid in a wrong column, we can shift the balance from one head to another head. For example, instead of entering the amount in late fees column, we entered in interest. Now that balance in interest column can be shifted to late fees. This is a new concept which has come up just few months back, PMT 09, for shifting of balance from one head to another head. See that? All taxpayers registered under GST are eligible to shift any balance available in cash ledger using PMT 09. If wrong tax has already been utilized for making any payment, then this challan is not useful. This challan is useful actually. This challan is not useful because wrong tax has already been paid. This challan allows only shifting of amounts that are available in cash ledger. Obviously, if already you have set off, then no question of shifting again. The shifting story will come only when balance is still there in cash ledger. For instance, in case an amount is misreported in 3B, tomorrow we'll talk, there is no way to rectify the same as 3B cannot be edited. In such case, only and only adjustment in next month return can be made. Next, one question from our friend. Sir, if we didn't opt for QRMP this year, can we opt QRMP from next year? Yes, we can do that. Yearly basis, we can change. Next. This is how it looks, my dear friends. PMT 09 for shifting balance from one head to another head. Where first you can see what is the balance available and the amount can be transferred from one head to another head. And major head, minor head means major head is nothing but CGST, SGST, IGST. Minor head is tax, interest, late fees, penalty. That's the meaning of major head and minor head. Finally, the last discussion, guys, CMP 08. Already I told you, a very small table. Nothing is there in that. This is for payment of tax by composition registered person. CMP 08. CMP 08 filing must be done by all composition registered persons. The summary figures of the value of supply and tax payable for a period of 3 months has to be entered in table 3 of the form. Taxpayer can select 5 nil CMP08 in case the taxpayer has no outward supply during the selected return period and accordingly no tax payable, or has no output tax liability due to not having inward supplies on which tax is payable on RCM. Finally, does not have any other liability. There is no liability, file nil return. There's some liability, show the outward supplies, pay the tax. Nothing is there in CMP08 because it's a composition where we do not take credit, just show the outward turnover and pay the tax. And we know that for manufacturer and trader, it is 0.5 plus 0.5. And for restaurant and catering, it is 2.5 plus 2.5. And for other than those category, 50 lakhs limit will apply. And the rate of tax is 3% plus 3%. That is a story what I wanted to discuss with you guys, especially in relation to GSTR 1 and also the IFF at the same time PMT 06. Very, very interesting discussion, which makes a lot of sense, my dear friends. Yeah.
Thank you, sir. Thank you, Shioteja sir, for excellent deliberation of each and every column of GSTR 1 and GSTR 4 and related forms also in a very clear, crystal way, and clarifying many of the doubts of practical doubts of our students. Thank you so much. Tomorrow, sorry for the disturbance.
Yeah, no problem, no problem.
Tomorrow, sir is going to deal with the GSTR 3B, 2A, and 2B,
yeah,
which is also very, very important topic, dear students. Please join for that also. And today, with this, today's session is complete. Thank you.
Thank you so much. Thank you, guys. See you tomorrow. Bye-bye.